Good morning, everyone, and welcome to the Quantum Leap homework session and trade plan setup pre-market for Friday, February the 8th, 2014. For those that are visiting us, my name is Doug McKay. This is Quantum Leap. We are a self-organized learning environment. We have a Skype room that we come to chat in, and then each morning we come in and do these homework sessions. If you want to come in and check out our room or find out about more what we do, this is not a commercial venture. This is a private enterprise, and you can give me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. So each morning we come together and we go through a series of routines and analysis, and then we set up our trade levels and our targets for what we feel is the probable rotations, and I give an outline of what my main hypotheses are. If you're visiting us from Twitter or in watching the YouTube after the fact, you might want to skip ahead to where we get into more of the in-depth chart analysis, but we start with the macro to the micro with the key numbers, and then the macro to the micro with the trends and the different time frames. I do this because this is my routine in the morning and I don't veer from it. So it is a little bit of a lengthy process, so if you want to skip ahead, I encourage you to do that. But never skip your homework or your routines. Let's get the legals done. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading features or any instrument involves the risk of loss. Please consider carefully whether features or options are appropriate to your financial situation. Only risk capital should be used when trading features or options. Investors could lose more than initial investment. Nobody from Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own plan. Okay, so let's start and take a look at these numbers, and I had a big spiel about looking at some different things, but now they're kind of different. Open of the year, 1837.75. I was looking at this month open and the fact that we were up near the month open and possibly going to go and get back above the open and probably go and test the month high. Well, we did that all in the matter of about a minute and a half with the spike up to 1786. Which is our Globex high. Our month low still remains the same at 1732, but we're now back into, now we just popped right back up again. So we're back up into that upper distribution. We'll look at that when we get into the composite. So our month open we've got to pay attention to, which is the 1777.50, and our month high 1783 and a quarter, and our previous month close at 1761, and the previous month low at 1761.25 and the close at 1777. So that 1777 is going to be a key area for us, and of course we've got to hold that 1761 and a quarter, which is the prior month low, and above that CLVN at 1764. And if we can do that, then I'm looking for a continued rotation and a move back up into this distribution that we'll take a look at. Let's take a look at the intraday Globex open yesterday, going into the yesterday's session at 1744.75, high at 55.75, low of 44, and then we opened at 50.75, right on top of it was to the tick to the top of the RTH range from the prior day. And then we didn't look back. We had an open drive, and if you missed this open drive, there was only really two other spots that you really could got into a trade that was worthwhile, and we'll take a look at that when we get into the daily chart. Obviously, we had a trend day, and because we had the open drive, we did not have any opening swing. And you never want to fade an open drive, because they will tend to turn into a trend day a lot of times. So you really want to find those retraces. Usually one major retrace that you can catch in, but you really want to trade towards in the direction of the trend and not try to fade what could turn into a trend day, because you end up getting your face peeled, or just having to take little chunks out of the market and work twice as hard as you have to. The initial balance high 1762, initial balance low 1750.50 for an 11.5 point initial balance. Again, noting that the average range of the initial balance, the first hour high or low, is between 6 and 9 points, and we have been seeing a lot of large initial balance. And this is the reason why, is we're at a level and we're at a period right now where the buyers and the sellers are battling it out for control. Remember that our open, we're currently right now below the open of the year, so we're on a down year, and we're trying to hold above some key levels. And when you get that, you're going to get these large rotations as the buyers and the sellers fight it out, the bears and the bulls. You can see that yesterday we had a nice bit of a rally off of the bottom of the line of that downward sloping fork. We'll get to that in a couple minutes. But all our numbers were higher yesterday. 1230, 62 and a quarter, RTH high 69.75, our RTH low 1750.50, and then we closed at 67 and we basically stole the VPOC into the close at 1767.50, or accepted the most, or traded the most accepted price just at the close there. Our ranges, you can see, they continue to expand out. We talk about this as well, is the fact that they are battling this area. Therefore, you're going to get range extension as they whip it back and forth. So you've got a 17.5 RTH range on the 20-day ATR, 23 on the full session, and 13 on the Globex. Value area was high at 69.50, low at 62, so we've come up and we've accepted value higher, and we did get a make and break yesterday for the initial balance. They went up, and of course, because of the fact that it was open drive, we kept on just banging higher, and we set the IB and broke it for a make and break. A little bit lower volume than the last 4 days, as things sort of settle out a little bit more. I think we've got some support below us at that 1732 now. So now they're fighting it out, and volume's starting to drop back to normal. Let's take a look at the ATR calculator. Obviously, I had to change these numbers after the news, but our high currently right now is 1786, our low 1758 and a quarter. So the 20-day ATR targets above 1781 and a quarter, which is right there back in balance at that 1781.50, the upper distribution that we're back into, and the low 1762.98. Which is just above that low of the month. Low of the prior month. So at that 1761 and a 61 and a quarter. Yeah, 61 and a quarter. News, obviously, we had non-farm, which was the big news this morning, and gave us that big spike and then dip, and now just working our way back. And we really don't have any other major news until 2 o'clock, and it's really not that major, and that's the consumer credit at 2 p.m. And these numbers are in Central Time. So let's take a look at the macro to the micro on the trend. Obviously, we came down and closed a bit of the technical gap that we've got, tested the 9 EMA, and we've now bounced off. And we had broken below the prior 2 months lows. Now we're back inside of both the prior 2 months. So we had started to lose a little bit of slope. We still have our separation. Now we're bouncing back, and you're getting slope and separation. So the trend again on the monthly is very much intact. On the weekly, we had some weakness coming in. It looked like we were going to have our first close below the 20 on the weekly, and we still have that possibility. We're hovering right at the 20 SMA right now, so if we close below the 1775.50 area, that will be the first close this year below the 20. We do see a little bit of weakness coming in, but we've got a strong little buying tail right now on the weekly. So I mean, they took it down to that 32 level, found buyers with conviction, and moved it up. I mean, you know, can't ask for better levels than that. Going down to the daily, we had created this technical gap, you know, that we talked about the last couple days, and that we should close it through consolidation and or combination of price movement, and we've now come up this morning, yesterday, and closed that gap. We're now trading above the 9 EMA, so we've come down, and where we started this trend down, we are now invalidating or violating the downward trend on the daily by coming back up here. And you know, if we close back above the 9 EMA, then this little trend that we are in is violated, and we're into sideways consolidation. Yesterday we talked about popping off of the bottom of the downward sloping fork, coming down here. We didn't quite get down, back to the bottom, and we said if we held, likely come up and close the gap and test the center line of the downward sloping fork, and we've done that this morning. We're sitting right on top of the line right now, so I think the key for us right now is, do we reject the upper channel of the downward sloping fork, reject this center line, and come back down and down again and test this lower line. We do have this energy point that's up here, and it's scheduled to hit around the 10th, and we're coming up to getting above the center line of the downward sloping fork, and we're coming up to test the lower line of the longer term fork. If we can get upside, up into this, upward sloping fork, then I think we got a good chance that we see this energy point being hit, beginning of next week. The test of the upper line, or the lower line of the upward sloping fork will take us up into that 1794.75 area. I'm really looking at that 1798.25 is my target up there, and that will put us just inside of the the upward sloping fork and long-term fork that we've been following for quite some time. So let's take a look at the trend coming into the RTH session on the intraday. We were consolidating sideways on the 4-hour. We now have popped up, and we've got slope and separation. We had created a technical gap. We came down and closed the technical gap, and we've got a fairly decent looking trend going in the upward direction with slope and separation on the 4-hour. On the 30-minute, we were basically consolidating sideways, had the big spike down, and we're now back above the 9 and the 20, and we're getting a little bit of slope and separation, but we created a technical gap on the 30 minutes, so likely to get some rotations. In fact, this is probably going to turn out to be a FUBAR tech gap, Mr. Sneaky. So I would expect some rotation this morning coming back. We've got to take a look at where we've had some naked crosses. I had a whole bunch of naked crosses, and they got taken out. So on the 30-minute, we still had this naked cross up at 1775. We also had it on the 30-minute, on the 15-minute. It's much clearer on the 15-minute. Just going to bring it in so you guys can see it. I want you guys to start paying attention to these naked crosses, because they're a great addition to your trading. We had talked about this naked cross. The naked cross is where a 9 EMA crosses over the 20 SMA. We watch them on the 5, the 15, and the 30-minute for our intraday trading, and we look for probable rotations and opportunities to get long or short into these, because they have a very high probability of being filled. And you can go back and do all your own due diligence on the study. I've been studying it now for several years, and it's really good. And you can see that one was naked. I had it on my list today, and what did we do? We came up and we hit it overnight, even before the news. So taking the news out of it, we rotated back there and went right to the tick. back and closed that naked cross with the high here at 1775.50. So just keep an eye on it. We do have a naked cross down here at 1751.75 on the 15-minute. So I'll be watching that this morning. See if this spike gave us anything really. It did not give us any new naked crosses. Let's check the 5-minute. We do have one right here, so we'll mark it down on the 5-minute at 1772.75. 1772.75. And of course we took out the 71 and the 75.50 that I had listed. So the 5-minute, we're getting a little bit of a move up and a possible rotation, but we have a naked cross, so we're looking, a trend up, but we're looking for a rotation back to the 1772.75. Let's go and take a look at the composite. So we're back where my initial homework was, whereas we're inside of this main distribution. Now remember, we have this, this larger balance area that was from November the 14th through to December the 19th, and the most accepted price, or the microcomposite VPOC, was at 1781.50. So we were watching that at the time it was 806.50 if you remember, and we said if we got back below that, we are getting back into this distribution zone, and the first target would be the 802.50 area, which was the last accepted price before they broke out of this balance area and took us up to make the new highs and create the balance area up in the 1800s. But if we couldn't hold, to look for them to come down and rotate down to the 1781. They came down to the 1781, chopped around, and then when they fell out, when they were trading in here, we were saying if it broke below 64, that really there wasn't much below, and that we should look for a rotation to 52.25, and if they couldn't hold 52.25 all the way down to this 32.50, they did come all the way down to this 32.50, came, found buyers with conviction, rotated back up, tried to hold here, came down and tested it again, came up and accepted value at 46 and 52, and now we've now broken back above that 1764.25, and we're trading inside of this upper distribution. So 1764.25 now becomes our major line in the sand again, and if we can hold above 64, more importantly even that 61.25, because that's the previous month low, we should get continuation and a rotation back up into the heart of this distribution zone, targeted right around the 1781.50 and then the 1786.25. 1786.25 was the 5-day microcomposite VPOC, where they were trying to hold value back, inside of this distribution, failed miserably, and then fell out of it and went down and picked up buyers. So currently, anything above 64 with even a push through to 61.25, you want to be careful. Don't try to short right away if we come down and test the 64, because they could come down to 61 and then pop back up through it. So I would any shorts that you're looking for, I would wait for a break below the 61 area. That takes us out of this distribution zone below the 60.75 and gives you a higher probability to come down and test this distribution zone down here, which still remains very ugly and not properly auctioned. So I don't think we're done with this area quite yet. I think we could come up, and my main hypothesis is to remain in this upper distribution today, going into Friday. Possibly a low volume, light drift day up towards 81 and 86.25 with a possible push through up into the 92.25. What was the ATR, the new ATR target to the upside? It was and change my notes in my journal. Full session is at 1781 and a quarter. So that takes us right to the most accepted price in this distribution zone. But if we get below 64 and below 61, then I'd be looking for a move down, and probably down into the 52 and a quarter would be where I would first look for a rotation to, and then some chop between 52 and a quarter and 46 area. But if we stay in here, look for that drift up on light volume today. The value area low of this distribution is 17 and a quarter. So there's another area that I'd be looking at, and the value area high is 96 and a quarter for the bigger balance area. And then on the 5-day, the value area is 74, so between that 72 and 74, and then the value area high is 1788.50. So that brings it that 81.50 and 86 and a quarter as a possible play. And so the first level I would be looking for is that 74, then 72, and then the 61, 64 area. Let's take a look at overnight. So overnight high, I forgot to take some of my, let me just take some levels off my chart. Okay, so we are now back above the range from yesterday with the high at 69.75. So the value area high for yesterday is 69.50 with the high at 69.75. This is going to be a main trade area for me here, but we're currently above that 74 area and the 72, so I'm going to be using 74 as a possible trade area. And I'll show you why in just a second. And our low is now 1758 and a quarter. And our current overnight VPOC, which I don't think is going to change, is 1771.75. And we can get rid of this. Okay, so we're up in this distribution zone. We've got the larger value area low of the bigger microcomposite VPOC, the balance that we were in for a while here, is all at this 1774 CLVN. So it's not a major CLVN, but it becomes important because it defines the 74 level as where we are trying to hold value. And it's also, above the prior day range. So on the open, we're going to open, if we stay in this distribution zone, up here above 69.75, we're going to open auction out of range. If we open above 74, I'd be looking for a move to test 74 and see if you get responsive buyers stepping in there. You can call them responsive, you can call them initiative. We're above the range. If they come down and they respond at the 74, I look at them more as being a responsive. But we could push through and come down and test the value area high from yesterday and the range high and the 1769.75. So I'll be looking to trade and looking to see if there's buyers coming in at the 74 to hold us and take us up to take out the naked VPOC at 1779, and which will be our first target above, and then our 81.50 is going to be our main target above, with the other target being that 86 and a quarter. Come on, give me my pen. And above that 86 and a quarter, there is a little CLVN right here at 89. and that's just below that 1790. So I'd be looking for some resistance to come in and push through to this 1790 1/4, and I'm actually going to use this as a trade area as well as a target, because I'll be looking for responsive sellers to step in here. If we go through and break above this 1790 area, the key target for me above, well, there's a 94 1/4 that I'm looking for, because that's going to be breaking us out of this 5-day micro composite above us. So that will be a area that I'll do business, is 94 1/4, and then my extended target is this 1798 1/4, and that is that CHVN and the distribution above the 94 1/4 and a prior microcomposite VPOC. So this is my extended target up here. And sorry, I got to build a button that says extended target. Okay, and possibly push through to test the 180175 and test us into the 1800s. And then if we get into the 1800s, you've got a target up here, and it would be very extended, and I'm not anticipating that today. You've got that 1802.50. So if we break above, actually, I'm going to make this 1800 and 75. If we get above 1875, I'm not going to get into the reason why I'm using 1875 versus 1800, but it was a key LVN when we were in this upper distribution, if you remember. And then a target at 1802.50, and then above that, we've got that target and naked VPOC up there and naked close up there in that 1813, 1812 level. If we get inside of the prior day range, obviously our initial target is going to be the 67.50 and the gap close here at 1767. That's going to be our target inside of the range. And if we can get inside of this range, this is also that right near that LVN, and you've got a swing low on the close at 1765.75. I'll be using that as a trade area. And if we get below that, I'm looking for a move down to the value area low, which is going to be down here at 62.50, which is going to be my target. And then just below that is that trade area at 61 1/4 to that 60.50 area. So it's really going to be a little bit wide area down here, but call it 60, 70, 60, 50, or 60 1/4 to 61 1/4, and then of course below that you've got the overnight low, and we've got then we're coming down and we're below that 64 area, and we're into repairing this area down here, and an extended target below is going to be back into this 52 1/4 area. And probably a move and a trade area down here at 50.50 for the range low, and holding us inside a range, and the initial target below there is going to be the microcomposite VPOC at 46 and the naked VPOC at 46, and then you've got that naked close at 44. And that's about all I'm anticipating. I'm anticipating probably a fairly tight day with a upward drift into the 81.50, 86 1/4. That changes my hypothesis. My main hypothesis changes if we get inside of the prior value area. I'd be looking for a test down lower and a test of that 64 1/4 with a probable push through into that 61, 60, 50 area. Taking a look at the Keltner channel, tested the lower Keltner. We're currently below the center line. Center line is at 1777 and a quarter. Remember, the 1777 is that month open, and then we've got below us the lower Keltner is down there at 72, which is going to be a test of the overnight VPOC, and then a test of the upper Keltner will take us up in between that 8150 and 8650, and likely go up towards that 8650 and get a walk the line up there. Taking a quick look at gold. Gold went and hit that 72. We went up to that, we hit the 74 yesterday, and then we just went up and, almost got to that 72 area. Let me just move the, so our microcomposite VPOC is still down here. The value is still below us. We're struggling to get and hold above the 1764.90 area. We keep spiking above it. You can see every time we get up there, they're rejecting it. Sellers are stepping in and bringing us back into this lower distribution below the 64 and back into value of this distribution zone, with the value area high at 60.10 and value area low at 38, with the most accepted price of 42. So if we can't hold above 64.90, still my line in the sand for a move higher. If we can't get above that and hold, then I'm looking for more chop in this area with a drift back down towards this 41, 42 area to pick up buyers with more conviction. And then if we break below that 37 and move down to the 32 and the 26, with the other side of balance being down there at that 18 and a quarter, and below the 18 and a quarter, the big target is down there at that 1203.30 again. And I think if we get below this 18 and a quarter, we're actually going to probably come down and visit the 1700s again. It'll be a show of much weakness. But keep in mind that we still have this this bottoming pattern that I've been talking about, this descending, widening wedge, that are strong, bottoming patterns, and we're holding above the upper trend line. So this trend line is getting violated. So I'm still anticipating, if we can hold above this, to get a much bigger move in gold. I just wish they'd, get on with it and not, see all these selling, wicks above us. But we are holding the trend line. We are holding the 9 EMA and the 20 SMA, but they're not doing a very good job at it. Anyway, that's everything that I've got for this morning. I will take the charts and post them into the room, and close this room down and open up the live room for the Quantum Leap level 2s and level 3s. As always, trade well, trade safe, and we will catch you on the flip side.